going on, guys? Luke here today, and we need to talk about why earnings beats are sending stocks down. It happened to Tesla, it happened to Pinterest, and a bunch of others as well. And guess what? There's actually a reason behind it and more to it than just Wall Street hates my stocks. And it's imperative you understand this so you know what is coming next and you don't get too frustrated and make some bad decisions in the end. So I'm going to cover several stocks today and tell you why they are trading down, and I'll give you a list of stocks that are at risk for an earnings beat down. Earnings beat down. Anyways, you guys know what I'm saying. And all I ask for in return is that you ever so gently or smash that like button and subscribe if you haven't already. And I just released a series of videos on how to read earnings calls and some of the dangers around earnings calls that kind of complement the stock course, and all of that is available for you to view in the private group. And my guess is earnings is going to be a hot topic of discussion in our weekly live Q&As coming up this weekend. And there's actually a ton more too than just this that I'll cover at the end of this video, but just make sure you sign up on May 1st to maximize the value. All right, so let's start with Intel first. They had an earnings beat and traded down huge after the earnings. And there was really two problems. One, they were down from the previous quarter. And the second, and to me this is more important, they gave a warning about Q2 earnings and for the rest of the year. This type of guidance is never good for shareholders. And I hear you right now. Well, of course that makes sense why they traded down, but what about Tesla? They beat both the top and the bottom line number, and they have not run up 40% ahead of earnings like it has done in the past. So what gives this time? Does Wall Street just hate Tesla and all the FUD is just finally getting to everyone? First, Wall Street has been asking for delivery guidance for the rest of the year, basically for 2 quarters now, and Tesla didn't really give a solid answer again. Investors, and especially large investors, hate uncertainty, so Tesla keeping those numbers vague for now is keeping some of that money on the sidelines. Now, I agree completely that some on Wall Street just don't like Elon or Tesla at all, but the guidance from Tesla was very non-committal in the end. But what about Pinterest? I mean, they had a monster beat. I mean, it was huge, it was incredible, and they still traded down. Well, if you looked a little bit closer at their earnings, their user growth has slowed as restrictions from the pandemic are loosening, and that was the major reason it was not loved despite a blowout earnings. And the same goes for Netflix as well, who just got destroyed after earnings despite big beats as well. So what do all these earnings calls have in common? Well, the guidance was lowered, or it was just unclear what the guidance was, and that is what investors are hyper-focused on right now, and let me explain why they're hyper-focused on that. The question on everyone's mind a year ago was, how well are you going to do in this pandemic, right? Now every company that thrived through the pandemic is now being asked if they can keep it up when we come out of this later this year. Wall Street believes the light at the end of the tunnel is very near, and they are asking companies, are the record revenues and profits going to continue? Or is it going to give way when people get back on vacation and get back to normal? And to be honest, that's a valid question. When we are all not having to spend most of our time at home, how will we spend our money and how will it affect these companies in the end? Remember, Wall Street is always looking forward, and Netflix, Pinterest, and others are signaling they will not have blowout earnings in the future like they've been having. If anything, we may actually see the opposite from a lot of these companies. But what about Tesla? That doesn't apply to them. I agree with you completely, but let me tell you how large investors viewed their call. Elon said the chip shortage was the most difficult thing he has ever dealt with, but they have a plan and are navigating it so far. But they still cannot give a definitive number of deliveries because it's still basically uncertain. Now don't go yelling at me for thinking that. I'm just passing along to you how large investors are reading this. Tesla has absolutely navigated it so far, but unclear guidance would suggest they are still working through it. And that uncertainty will keep a lot of big money out until it becomes more certain. So what stocks earnings are coming up that could be a risk for an earnings beat down? I'm just gonna call it an earnings beat down. Or to put it a different way, what stocks are getting ready to report where the guidance may be more important than the numbers? Well, I think PayPal and Square coming up could be interesting if guidance is not what is expected. I mean, have we truly moved to a more touchless mobile banking, or do they see their growth slowing as well? And I don't mean going down in negative, I just mean not growing as fast as it has during the pandemic. We have Peloton reporting next week. It has been on a tear since the pandemic started, but with gyms starting to reopen again, do they see the growth continuing into the commercial segment? And how long do they think that will take? Those are important questions that the answers will be more than likely to move the stock more than the actual earnings beats will. DocuSign's earnings will have the same questions. And even further out, you have Zoom reporting later this spring, so another one where the guidance may be more important than the numbers that are reported. So as you can see from all this, there is much more to an earnings call than just the numbers. Heck, you can even have a great numbers and great guidance, and the conference call can just get a little sideways, and that can affect the stock in the short term. This is why I rarely, if ever, trade around earnings. There are just too many variables that can move the stock in the short term. I'm personally a long-term investor, so these are just blips that provide me opportunities to add shares on a discount, which is my favorite thing to do, and hopefully it's yours too. But if you are wanting more detailed information on earnings, or you want to ask me specific questions about an earnings call, consider signing up for the private group, and you can ask those questions directly to me. And you also get 2 free courses, a stock course and a money course, lots of tools to download, a super sweet Discord with a lot of awesome smart people, my watch list with price targets, my buy and sell alerts, and a ton more. So check it out, it's the first link in the description. Thanks for watching, and we'll see you in the next one.